Good morning. It's Monday, June 24th, about 6 a.m. Central Time. All right, the precious metals are stabilizing after Friday's bloodbath. On Friday, the pressure from a stronger than expected PMI data caused a 4% sell-off in the silver market, 3% sell-off in copper, and 1.5% correction in the gold market. In anticipation of this, many of you were able to reduce exposure on Thursday with that massive move higher on the precious metals. And I mean, how many times did I give you throughout the week that PMI data, if it does come out hotter than expected, we could see a massive sell-off, which we did. So if you were able to take advantage of that, many of you were coming back in towards the second half of the session on Friday and putting some of these positions back on. With the precious metals stabilizing, I anticipate many more people will come in and start looking at futures and then also call spreads on the precious metals. Now, despite the PMI uptick, the global macroeconomic environment really shows signs of weakening. I firmly believe that the Fed will make two cuts, one in September and also in December, solidifying a bottom in many of these markets. Now, what to watch this week, we will have consumer confidence, which is expected to be at 100.2. And if you look back on May 28th, it was 102 versus 96 expected. The result on May 28th, gold was up $27. However, I'm slightly suspicious that it was that consumer confidence data because we did have beige book that day as well as many other Fed speakers. So we're going to want to keep an eye on that. Now, I know today we do have many Fed speakers out there, and it seems like they're Fed speakers from certain regions of the country that tend to be a bit more dovish than expected. We're also going to have GDP. Now, remember, we had the weaker retail sales data. Weaker retail sales equals a weaker consumer, which equals weaker GDP, in my opinion. That's just using this basic formula that I've come up with. Now, if you look at the jobless claims, we'd had 5 straight weeks of higher data, and I think if we see another aggressive uptick, say 5,000 or more, that the 10-year Treasury should see a break, and we could see that correction back below that 4.2%. So highlight that on your charts there. Now, on Friday, we're going to have the PCE data. That's the Fed's preferred method for gauging inflation. We should see gas prices, which will go through a seasonal adjustment, slightly lower. Shelter continuing to linger higher, but services, goods, and discretionary spending have all come down and have been lower than expected recently. So we expect the PCE data to continue towards the Fed's target of 2%. We're also going to want to monitor on Thursday the presidential debate. The aspects that I will watch as a commodities broker specifically are U.S.-China relations, specifically with Trump and any mention of tariffs. The corporate impact of additional tariffs could be on things like Tesla, Apple. On the commodities impact, you're going to want to look at semiconductors, agriculture, and solar. Remember, solar is a major component of silver demand. If we see any kind of uptick in tariffs, it could weigh in on that demand. Also, China is a major consumer of silver, and that could weigh in on that demand as well. The other thing I'm going to want to monitor too is crude oil prices, because under a different administration, we were energy independent for a brief window, and also the hardline stance on Iran. So a lot of things here. Forget your personal beliefs here on it. We just want to look at what these presidential debates are going to bring as far as policies, tariffs, things like that, how it impacts our specific investments. Now, this morning, we will most likely be adding to gold, silver, copper, Bitcoin, and sugar. Silver, we're going to want to target some call spreads out to October. And then if you break down on the futures contracts, you look at gold, no real changes here. That first critical level support, about $2,300. First level resistance, 50-day moving average, 2370. And we must see a close over 2392 in order to reignite the bulls, the discussion of 2400, the discussion of those new all-time highs. And if you look at other analysts out there and other major financial institutions like Goldman Sachs having a year-end target of 2700, they're really citing a lot of volatility around the presidential debate and then also into this election season. Now you go to the silver market, your critical level supports the 50-day moving average at 29.29, with critical support about $1 below that at 28.28. You're going to need a close over 31.19 in order to bring back another wave of buyers. So something to look on the charts here today. definitely take a small snapshot and look at that Bitcoin market. Down about $3,000 here, really had a major sell-off, closing in on some critical support levels. Then also look at the dollar index, a bit weaker here today. We'll see if we could break back below that 105 level. I do have some seasonals that will be coming up here in July for the precious metals and also for the U.S. equities. Give me a call, shoot me a text. I'll let you know what those are. 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.